From a pure investment point of view, I would say first that drops of minus 50% and minus 80% will happen again, just because the volatility is in the market. It's a part of Bitcoin. No other market has this volatility. There are, we had a minus 50% drop with the mining ban thing a couple months ago. That was, well, not a really big event, but still a structural event, but minus 50%, right? So I think things like fear and greed in investors and people will be here to stay. Humans will not be different, and they will freaking out again when maybe the US bans it. Well, I don't think that's not going to happen, but something will happen. The introduction of the central bank digital currencies, the tightening news of know your customer, and you can't exchange it to fiat anymore. Whatever, some bug, some big entities selling because they don't believe in it anymore. I don't know what the trigger will be, but there will be panic, and people will freak out. Liquidations will come, and it will drop down. Yeah, I think that's part of the market. That's part of the charm as well of Bitcoin. So that will happen. That's the one thing. So greed and fear are here to stay. Minus 50%. We just had that. Minus 80% wouldn't surprise me. The second thing is, I reason from stores of value. So alternative investments. If I have a large sum of money, what are my alternatives? So it's equity, it's bond, and if you look at the commodity space or the non-financial asset space, it's gold, and it's real estate, basically diamonds maybe. But yeah, and so that's of course the stock to flow X model. I'm reasoning like an investor, like why would I put my money in real estate, or why in gold, or why in Bitcoin? And there are several aspects to what makes a store of value or money better than another one. And one is the visibility, another is portability, the classic fungibility, and scarcity. So I am not surprised at all that the real estate market is just so much bigger, larger than gold market. And I'm also not surprised that Bitcoin is a little smaller than the gold market. But as soon as Bitcoin, after the next halving, or really this halving, we should get really close to gold market cap. And after next halving, it would really surprise me if an asset that is recognized by the market as a store of value, that has, say, more than $1 trillion in value, if that store of value with bigger scarcity than gold would not at least be valued higher than gold. So somewhere between gold and real estate, 10 trillion and 100 trillion roughly. So in that sense, I think differently about the 4-year cycle. I think it's not, so the halving is important, not because of the miners selling, the sell pressure from because that's already neglectable. A big exchange is maybe bigger than some of the big miners, and add to that the ETFs and all the other sell pressure. So I think the selling pressure of the miner is not the thing. I think the fact that the scarcity is larger than gold is a fact, and investors notice that. They know it. Investors know that if gold can be made, if there's a new gold mine, of course that takes years to make it operational, but it can be found, a new source of gold, and then there will be a big supply. In fact, supply of gold has grown over the years, but with Bitcoin, for sure that will never be more. So basically, this is it. There's 19 or 18.8 million Bitcoins, and that approaches the 20 and then the 21 million. But this is it. So yeah, it is from a scarcity point of view and alternative investments like gold and real estate, that I think that the halving still will be an impulse for investors, because they will recognize and see Bitcoin for what it is, a really scarce asset and valuable at that. Then to conclude, I do think if the stock to flow of Bitcoin will be bigger than even real estate, so above 100, and that basically is the case after next halving, but and certainly after the halving in 2028, but let's say 2024, when we go over real estate, then it will be the most portable, most divisible, most fungible, and also the most scarce asset on the planet. I think investors will see that, and that combination will probably mean that people are going to see Bitcoin not as a store of value, but as in money. And that will trigger the hyper-Bitcoinization. So you could also say that Willy and I are saying the same thing. The hyper-Bitcoinization will be there eventually, but I think that will happen after the next halving and after Bitcoin has at least a stock to flow of 100 and maybe 200, but much bigger than real estate.
I think I agree with that. I mean, like, I think that we're looking at pretty much a 4-year from now to really, you know, have Bitcoin as a main contender on the world scene as a new money, or definitely a large macro store of value. Yeah, and you know, it's interesting because the next halving brings Bitcoin to the inflation rate below gold. It gets pretty scarce, and when I talk about the cycles, I think we agree on the destination where it's going. I think there's just different views on the shape of the chart. You know, whether or not we have the painful 1-year drawdown of 80%. And I think that's the difference of it is how, and you know, a lot of people have said, does it invalidate stock to flow? Well, of course it doesn't, because that's just based on the scarcity valuation, which doesn't change. It's just how does the price sort of meander in its shape, which is, you know, it's a very, you know, important point for people who want to time the market and want to sell the top, like, you know, I did, Plan B did for 50%.
It's interesting, Willy. It means we're back at that risk measure point, right? It's how do we and the options in there. So will there be a minus 50 or minus 80% drop again? It's a risk thing, basically. So that the end point is, I think, clear. The trend is clear. It will go up, but how will we get there? And will there be minus 80% drawdowns? That's the
exactly.